Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
Secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
In our deep dive this week, we are diving into the world of funeral service providers. FSPs, yes, funeral service providers, abbreviates to FSPs, but they also should be FSPs themselves. It's a little known fact that funeral service providers are registered and regulated financial services providers. And that comes with a set of implications. That's what we're going to take a look at. We're going to take a look at what that means for you and I as those that use those services and how we can best understand where all of it comes together. So the funeral world, not often something we don't really enjoy talking about. I mean, no one enjoys talking about death, but the reality of it is with South Africa having one of the highest murder rates in the world, it's not something to be proud of by any
Also
stretch
just
of the
generally
imagination. And just life expectancy.
and that's
like
HIV,
human nature or human things happening, right? Surely for me, and I've always looked at this and thought, the funeral industry is a booming business.
Yeah.
Constantly booming, constant supply of clients, constant supply of business. But many people don't realize this. It's actually a regulated space. It should be a regulated space, and you should be dealing with regulated parties in that space.
Yeah, and it hadn't occurred to me, but when you sent this yesterday, I'm like, so yeah, if we're just going to bury you and I'm going with my credit card and saying I've got Jimmy, please can we bury him? And I'm going to swap. That's a different story.
Yeah.
But for most people, there's policies and things involved, which
Yes.
means that you now need regulators and oversight and compliance and KYC and all of this sort of stuff. Hence, and so I just went to the FSP and typed in under name funeral.
Yes.
And there are lots. Although I got to say, most of them are license withdrawn, rejected, lapsed. There are some authorized, but there are a lot of them, and I hadn't realized this, that you need to, because that's a lot of effort. But I mean,
Yeah, so I think the part of it that becomes regulated, and the part that we need to understand from a regulatory standpoint is, number one, the funeral policy itself is a financial product. And the FSCA is very clear around how financial products are regulated, no matter what the financial product is, whether it's a crypto platform, whether it's a CFD, whether it is a funeral policy. That policy itself is a financial product. The second element of it that would then push it to be a regulated thing is you are collecting premiums for that product. So every time you pay a monthly fee, a monthly installment, or whatever for your funeral plan or funeral policy, that is a financial product. This is why when a Sanlam or a clientele or whoever sells you, who tries to sell you these products, picks up the phone and says, hey, please note that we are an authorized FSP, or we have agents that act under supervision, and those sorts of terms and disclaimers, they have to notify you of that because it's a financial product. And I think when you get a funeral policy, that should be your first thing. That should be the very first thing that you look at is the person that's giving me the financial product itself. Are they regulated to do so? Because in the funeral world, much like the insurance world, there is a service provider that sells you the actual policy. But then there is a separate financial company, a separate FSP that is the underwriter that takes on the risk of that financial product. So it's not always the case that if Jimmy and Simon's funeral services sells you a funeral policy, that we are the ones underwriting that. We could have someone like a Guard Risk or a Santam or one of the big companies underwriting our policies. And in that case, you have to do extra due diligence to FSPs. But the person selling you the product, that financial entity or that funeral service provider has to be regulated.
Yeah, absolutely. And that's the important point. And I think a lot of us think of sort of funeral policies. My housekeeper has a couple of them, but these are informal, sort of, they're stokvels.
Stokvel type of setups, yes. Which stokvels have their own kind of governance structures to them,
And hers works actually very well, and but it if you're doing it, if you go into the Avbobs and the like of the world and the old mutuals, etc., to get them, they are. But it does mean that there are some folks out there who might not quite be legit.
That's it, right? And those are the folks that you need to be wary of, because part of this conversation came up because there was one of the funeral service providers that claims to be one of the best in the country and possibly one of the best on the continent and all sorts of things. And we've seen time and time again that people have strange complaints from a funeral perspective. Like, oh, I took out this policy and I was supposed to get these benefits and I didn't get those benefits. But now I've got no recourse. And I want to look at that from a protection point of view. If you're dealing with a regulated entity, you can then, under phase law, which is the law that would then govern them, not Financial Markets Act, but the insurance laws would govern the funeral services, you can then file a claim and a complaint against the Ombud and say, I was unfairly treated by this funeral service provider or by this service provider because this is what was said to me, this is the agreement I was made to sign, and this is what I got in the end, which again means that as Jimmy and Simon Limited, we then have to make sure that our documentation is up to scratch, that we provide the
Jimsum.
Jimsum. That's what we're going to call it, Jimsum. So as Jimsum, we need to provide our clients with regulated things that are above board because we're an accountable institution. Correct. And a lot of people, first of all, reading those policies can seem like a dreadful exercise in itself. And the last thing you want to do when you're having to deal with a claim or you're needing them to pay out or whatever is to go back and say, oh no, I didn't see the fine print or whatever, or now I can't put a loved one to rest because we didn't have this cover or that cover. And again, that's where, I suppose this is where dealing with a regulated party gives you a little more security and a little more certainty.
Absolutely. And that's what you want. When everything goes well, it doesn't matter who your counterparty is because everything went well and everyone's
Smashing.
happy. It's when things don't go well. And the truth is that it's more likely to not go well with an unregulated because they just don't have the things in place. It's just not there. Jimsum's just like two oaks. You're like, yeah, we'll take your money, we'll invest it, we're good. Something goes wrong. It's like, oops, orcs. And there's no recall, and that really is it. Now, sure, it adds some costs to the process, but those costs are there designed to protect you.
So, have you ever been to for lack of a better phrasing, I want to say a black funeral, but not specifically just a black funeral. A cultural funeral where there are certain things that are observed. And there's certain traditions that are followed. There's certain steps that have to be put in place and all of that. What do you think is the most important element at one of those events?
What do I think is the most important?
I'll tell you what it is, but I want to get your thoughts around it.
I don't know. I've been to loads, mostly in the 80s. And when I say loads, probably hundreds. Violence in the 80s. There was a civil war. To me, it was the closure.
Today, it's the food. It's the food, Sai. It's the food. Because a lot of what happens in kind of these cultural setups, there's animals that must be slaughtered as part of a sacrifice. There's people that must be fed that are coming to mourn with you. There's a catering company that is called in to make sure that all the guests have stuff. And so the catering part of it is a huge part of the business. Yeah. And a lot of what people look at, so when you kind of take out a policy and those sorts of things, people go in and say, perhaps we need coverage for the burial plot. We need coverage for the casket. We need coverage for the food. We need coverage for the tent setup and all those things on the day and the vehicles. The vehicles is another thing. We want this quality or this category of vehicle that goes into moving the family or the loved ones and all of that. So that's a lot of what happens in how those packages are put together. And so funeral service providers will say, okay, cool, here's a base package that covers burial plot, caskets, basic services. Now you want catering covered, this is how much we add on to your premium. Now you want this covered, this is how much we add on, those sorts of things. So there's a lot of add-ons in this space. And I often wonder that if we're looking at that kind of thing, so yes, obviously you can outsource those services and all those things. From policy holder perspective, right? you clearly need to know what your premium is covering to know what you get out of it at the end. Because when you want to then lodge a complaint and say they promised to provide after tears alcohol, and suddenly there's no after tears alcohol, and people are like, but what do... Sorry,
also-
you are aware of after tears.
But the after tears alcohol, they might bring 2 bottles of Johnny Black and say we provided it.
Technically, we did.
Yeah.
The fact that you drank it all is not...
That's only
is not on
60
us.
shots, and that's basically
it.
you and I sorted. What about everybody
What about
else?
everyone else? Exactly. So this space is so underrepresented, underspoken about from a financial standpoint. We often just go in and say, yeah, no, I put down 500 Rand a month. I expect 50,000 Rand when I need it. And then the funeral company says, okay, cool. Here's the 50,000 Rand that we promised you. But what we don't discuss is if I'm contributing for X amount of time, X amount of months or whatever, the funeral service provider has the right and the discretion to go and put that money in from a risk perspective to pay out, right? So they actually take the money, go out and buy other financial products, buy insurance products, buy financial services products so that that money grows, isn't affected by inflation, and allows them to be able to pay out what they promise you, right? Now, it doesn't really clearly define, the legislation I don't think clearly defines where funeral service providers can invest the money. But this is where you start to see companies and these private funeral services platforms say, oh, but we put the money into this thing and now the money's gone and now we can't cover your funeral. And that then brings back to, should you then be putting those sorts of things together? And if you do, should you be doing it in a stokvel structure, or should you be doing it in an FSP structure? And how you best protect the little that you have to send off a loved one?
Yeah, so I mean, the short answer is that I don't know that your stokvel structure. I mean, I've just called up this is Claude saying, what does a funeral cost? And Claude's saying 15 to 50,000, although looking at some of the numbers.
That could just be the casket.
No, so basic coffins are 1 to 3, but fancy
1
ones.
to 3,000 Rand.
Yeah, for a basic one, but a fancy one's 50K or more.
Yeah, so the entire funeral can't cost 50K.
Yeah, a burial plot is 2 to 10, but can be 50,000.
Have you seen? Yeah,
the hearse is 5. Flowers can be 5 or more. Catering can be 2, but could be 20. I mean, this could easily run 100,000 plus.
250K.
200, yeah,
easy.
In which case, so the burial society that my housekeeper's on. And I don't know the exact mechanics of it, but every so often she has to pay 100 Rand to someone so it's not just the member of the society, it's family as well. So children, grandchildren, partners.
Beneficiary, yes.
Every time someone passes, there's 100 Rand paid across to them.
Okay.
So, but this is a group's only about 30 people. So, I mean, sure, you got yourself 3 grand, but it's just 3 grand. That's kind of like, there's your after tears alcohol. Maybe depends on the size, but it's the level of cost, perhaps.
It is. It is a costly exercise to have a funeral, especially if you have more than one. And I think from a financial services point of view, and from understanding the regulated side of it, it becomes important to then look at all of this that's happening and say, are we adequately covered? And is that coverage clearly defined? Because when it's not clearly defined is where the loopholes start to come in. But you didn't pay. So you took a basic package that doesn't give you access to this level of casket. It only covers you up to a 10,000 Rand casket, not a 50,000 Rand one. Or the flowers are only capped at 3,000 or whatever. And funny enough, that's not just limited to the funeral services space, right? That's the insurance space in general as well. The coverage that you have and the premium that you pay for, that's all stuff that is supposed to be clearly defined prior to you entering the agreement, so that it doesn't change at a later date.
And so that you don't get a surprise.
Yes.
Because there are also, I don't know, I can't remember what my parents' funerals cost, but at my mother's funeral, there was one bunch of flowers. I was a poor kid. Sorry, Mark. Weddings and funerals have become big business, and it is, to your point, now you can't buy wedding insurance,
although Jimson loading, guys, we got you covered.
Yeah, we're going to get so ripped on that. Like, take the policy today, propose tomorrow. It's like, whoops.
No, but that's why they've got those mandatory waiting periods, cooling off periods. Medical aid does it. You have a 30-day waiting period before they cover certain events.
We need a multi-year waiting period. But it's as with any financial product you take, make sure you know what you're getting.
Otherwise, you find yourself in a situation where you get stuff you didn't pay for, or you don't get the stuff that you actually did pay for, that you thought you were paying for.
Yes.
I think the other important point around making sure you know what you're paying for is reduce everything to writing. This is, at the end of the day, it's a policy. It is a legal agreement. It is a binding agreement between you and a service provider. Put it all in writing. There should never be a point where someone says, oh, we can add that later, and then they don't add it later. If they add it later, fine. But then that's what's called an annexure to an agreement, and it's a supporting document that says,
Sure.
in addition to what we previously signed on this and this a day, these are the things that have changed. The same way when your adjustments or your agreements change from a service provider point of view, they notify you. Interest rate decisions happened last week. The banks have already started notifying people, hey, that mortgage that you have with us is now going to be 25 basis points cheaper than what it was this time last month, right? So there is that obligation to communicate changes in agreements to people. And that only happens if you've got your agreement reduced to writing.
Yeah, that's it. And it's the structure and the certainty. And you know what? Sometimes it doesn't go according to plan for a bunch of reasons. At least there is then some recourse.
Some recourse, right? Otherwise, you have no recourse. And I think that's where people start to then worry. That's where people start to have the concern, and people start to sit there and say, but we thought we had recourse. We thought we had support. We thought we were covered for this and this and this, and now we don't know where to go, or we don't know what to do. I mean, the last thing you want is to be paying for 5, 10, 15 years into a premium, and then at the end of it find out it was not worth it, or you get nothing back. In some cases, people get less than what they put in terms of premium.
Yeah.
It's shocking out there. But to stay safe from that shocking, folks, that's exactly why we say reduce the agreement to writing, and wherever possible, deal with a regulated service provider. Now, of course, we understand that some of these community service providers, you might want to start as a Stockville type with people that are together and all of that. Reduce everything to writing. From our side, we are not providing you with financial advice. This is not the show that does financial advice, and we'd hate for you to come back to us and say we've given you financial advice, or that someone else has given you financial advice and you'd like help from us to deal with that matter. Speak to financial services providers. That's why they have regulation. That's why they are regulated. That's why we advise that you deal with regulated entities. But that's the note that we're going to leave the deep dive on. We want to just get your thoughts and your experiences and your opinions on what you've gone through. What funeral services providers have you been using? How much have you been paying for these plans and policies that have been put in place? And have you gotten your money's worth? Have you had incidents where you wanted to put in a claim, you were unable to put in a claim because you thought you were covered and you weren't? We'd love to hear your experiences. Please share those with us and do some homework if you are looking at getting the coverage from your perspective for your loved ones. That's the deep dive. And we wrap things up with Investor Insights. We are taking a look at the delisting announcement from a company called AO Technologies. We're going to update our wall. We're going to add something very interesting to the wall. And then we're going to, of course, share with you our unfiltered opinion of the week. AO Technologies, firstly, this is particularly interesting for us because of the history of this particular stock. The business, for those that don't know, AO Technologies, one of the big shareholders there is Sekunjalo. Is it Sekunjalo Investments or Sekunjalo Holdings? Sekunjalo Investment Holdings, both of those. And they have decided to buy up the rest of AO Technology and delist that company. Now, the interesting part about this is AO, from a business perspective, is a company that in the past, the PIC has put in a significant amount of money.
4.5 billion or something, I forget.
I think it was 4.3, but 4.5 is close enough of an estimate. More than 4 billion rand into, that's billion with a B, yes, into the company. And the company's performance has been less than impressive, to say the least, given that of that 4 billion rand, the PIC has entered into a settlement agreement of sorts, expecting to recover less than 800 million rand with an M, right? So we've lost the B, we're down to an M. So, I mean, even if you were to recover 1 billion rand of the 4 billion rand investment, you've lost 75% of your investment value. Now, this company is deciding to delist, and that brings Couple of questions. Companies have delisted in the past. No real surprises here. I mean, the likes of African Rainbow Capital, ARC, they've decided to delist as well. So the delistings are a common part of life. Barlow World is another example. They're entering into a transaction there. Metrofile.
It happens.
It happens. It happens very, very often. But I want to look at the return on investment from that perspective. So a lot of what drives delistings is things like a share price trading at a discount for a significant period of time, and the company finally feeling, you know what, this discount is too deep of a discount, and we're better off just taking the company off the listing requirements. For some, it's the listing requirements become too onerous, it's not worth our time, and we're delisting, right? So Sasfin's another one that, this is just this year that we've kind of looked at delistings that are happening. This one in particular, no or very little return on investment for shareholders, a negative return if anything.
Well, listed at 43 Rand, trading at 40 cents.
Right, listed at 43 Rand, trading at 40 cents. At this point, I suppose the delisting becomes academic, because will you ever get back to the 43 Rand? When was the listing?
December 17.
December 17.
Am I right about that? I think it was December 17.
So call it 8 years?
Yeah.
7.5 to 8 years. 7.5 to 8 years, and your share price has lost 99% of its value, almost.
Yeah. And they had, but remember at the same time, off topic entirely, they were listing a second company, something I forget, which never got to market. They were going to be the Google, Amazon, and Apple of Africa. Anyway, that never got to market. So you're not getting your money back. 43 Rand to 45, actually closed at 45 on Friday. There's no liquidity. The only person who's made money here is AO Technologies, who got the 4.3 billion from the PIC. It's been a disaster. Anne Crotty was right in their last set of results. I think their single biggest expense was lawyers' bills. They keep on getting sued. Remember, they had bank accounts closed and stuff.
Yes.
They actually had some businesses. I remember back when they listed, they had something they were doing with Sasol. There were some other bits and pieces. They've just the whole PIC thing has just and it's just soured it. If you're looking to outsource and AO Technologies arrives as one of the folks wanting to provide the service, you're kind of like, next, please. I mean, it's just your brand is tarnished.
And that's not a good place to be. I mean, I suppose from a business perspective, I guess that's also why you then look at delisting to say, you know what, things haven't gone as planned. And granted, the economy of the world has been different.
Sure.
We've seen things happen. You know, life happens, right? Life has been different. But to not have had a meaningful return be provided to shareholders in 7 or 8 years, and then suddenly come back to the shareholders and say, here's pennies on the dollar for what's left of your holdings, it's a bit tough.
Yeah, and they claim to have restricted cash of 61 million. I don't know what restricted cash is, because that then shouldn't be a current asset. But and then lots of liabilities. They are technically solvent. Yeah, but it is just, I mean, they say that the book value per share is $6.
How do I recover that value as a shareholder?
Oh no, the book value of the share is now $1. I was looking at the wrong side.
Okay, so how do I recover value from an investment in that case? I mean, if I'm whether I'm the PIC or a retail investor,
it's really, really quite simple. Sell, put it somewhere else, and that one goes up. And that I mean, how is this? So to be clear, it's 99% down, but to get back to where you started, you need to go up 100-fold. So this thing becomes 100 bagger, and it's now 43 Rand.
And then you're just breaking even.
Now you are breaking even.
Technically, you're not breaking even, because to hold some of these stocks, if you'd been, depending on how you've been holding, there'd been financing costs, all of those sorts of things, and additional charges. So you might even need to go beyond that price.
Okay, that restricted cash disappeared. I don't know where it went. It's no longer there. 100%. You're not in any good set. No, I mean, look, this happens. I once put, I might have told the story. I put 20,000 Rand into a stock. 15 years later, I got 51 Rand back. It's not just that I lost 99.9, it's that I could have put that money in the bank and done better, and actually turned my 20,000 into 30,000 over the period, or as the case may be. My bad. Cash and cash equivalents, 243 on a market cap of 146. Have they paid the PIC yet? Because I checked and the PIC is still listed as a 26% shareholder.
No.
So fun fact.
So the agreement,
PIC
the agreement with the PIC, I want to jump in here, and perhaps that might add to your fun fact. The agreement with the PIC is the repayment will take place at the point where assets exceed liabilities on the company. If I remember correctly, that was a clear distinction that they made as part of the settlement agreement. So for as long as liabilities on the business continue to exceed the assets of the business, they're not obligated to make that repayment.
Okay. And I was looking at the wrong quarters. So assets are 14667. Liabilities are liabilities and equity. Yeah, okay. No. So the problem is PSC earns 25.52. They can block it.
They can block the
delisting.
delisting. Okay, take me through that.
Well, if they vote no, they don't get the 75% threshold. This is a special resolution. It needs 75% of shareholders to approve it.
Oh.
Problem is they just can't pay the PIC the money that they've promised to pay, or that they've been told to pay. Let's be clear around that. It wasn't a promise. It was a court, or actually it was an out-of-court settlement, if I recall.
Technically, yeah. So they agreed to...
They did agree to
that amount. Okay, so I'm
so
sitting
the
there...
PIC could block it, but I mean, what do they get from blocking it? I mean, like, they're not getting money here, so...
And even if it goes through and they finally recover the balance of it...
PIC lost 4.3 billion. Fortunately, in the PIC's life, that's not even a rounding error.
Fortunately, it's not even a rounding error. Okay, we're going to leave that one on that note, because that's as much as we can contribute towards that matter. It's going to happen with or without us, and with or without our opinions. But what we can share an opinion, and that is what it is, an opinion on, is something that we're going to add to our wall. This one was... something that I didn't realize that we'd overlooked for this long, right? So we discussed Palantir at some point, saying it's a US defense stock, great, lovely, all of those sorts of things. And now with Elon Musk having left Doggy, whatever it is you're calling it, and the...
We called that because his 130 days is up.
Yes.
Way back in February.
Yes, 130 days, finally up, he's gone, that's done and dusted. But... the United States has been kind of, I want to say, closing down certain things and redirecting that money into other areas. And we know the United States quite well by now. They redirect into one thing, that is military spend. That is the Pentagon. The Pentagon has the single largest budget of anyone in the world. In fact, the last time I checked, the Pentagon's budget, or the military spend that went into the United States, was more than... if we take the top 10 military spends in the world, the United States sits first. The other 9 players combined don't get to the more than 1 trillion that the Pentagon
and
spends.
8 of those 9 are allies.
And 8 of those 9 are allies. Right. So that gives you a bit of context around how much the United States spends on military. And we thought, how did we miss this entire time? One of the biggest companies that has been the most profitable from the US military in terms of contracts and things, and has provided probably the most consistent return on investment, is a company called Lockheed Martin.
Yeah. I don't know how. So
how did we miss this?
They are in aeronautics, missile and fire control, rotary and mission systems, and space.
And space.
Space.
So, from an aeronautics perspective, there was a rumor at some point that Lockheed Martin wanted to make a plane that deploys planes. So, for those folks out there that
like
have watched...
like a planecraft carrier.
Yes, like an aircraft carrier, but...
except a proper aircraft carrier,
exactly,
but carrying
that carries
aircraft.
Yes. And so, those that have watched any of the Marvel movies or any of the Star Wars movies, you know what the large aircraft carriers look like. I forgot what they're called now.
Aircraft carriers.
No, the destroyers. The destroyer in Star Wars? That destroyer, Lockheed Martin wants to build one of those. Who are they fighting a war
like the
with?
Death Star?
Who are they fighting a war with?
Rhetorical question, but what America has a lot of soft power. One of their soft powers is that if you mess with us, we are going to smear you over everywhere. Now, that hasn't quite perhaps worked as well, but it does kind of and countries benefited from it. Europe and NATO, Canada. This is all of Trump's complaints. These countries undoubtedly benefited from this soft power. America, and that's part of the thing. But they have so much. I mean, they've got more bases around the world, soldiers on non-US bases, than the EU has soldiers on EU bases.
But this is what I'm saying. America's making it seem as though they haven't benefited from deploying their troops everywhere throughout the world.
Soft power drive. So there was a meme on Twitter this weekend that's a lie that was saying Xi Jinping's daughter goes to Harvard. Xi Jinping would not let his daughter go to Harvard, but there are many leaders of many countries whose daughters or sons do go to Harvard, and it's that sort of soft power. But I mean, back to the point. I mean, they have far too much spending, although the interest bill has just overtaken the defense bill in their budget. But the short version is defense is always going to be huge. And with NATO wanting to, one of Donald Trump's Mar-a-Lago Accord points is that the NATO countries must up their spend. Truthfully, only to what their commitment is, which I think is 2% of GDP. Most have been underspending. Germany is now actually prepared to push that to 4 or 5. These sort of companies like Lockheed suddenly
let's leave the Germans alone. We know what the Germans do in a war. Let's leave them alone for now.
There's conflicting thoughts.
That's another story for another day, perhaps for another show. So Lockheed Martin, where are we putting it on the wall? I mean, it's a stock that it's one of those stocks where when you look at a company and we look at a company's balance sheet and we look at a company that produces things, that has inventory, that has suppliers and all of that, you always want to look at the strength of that company's order book, particularly if you're constructing. If you're a Boeing, if you're a PPC, the strength of your order book determines how much longevity you have. If you're a Murray & Roberts, a WBHO, all of those things. Lockheed Martin falls into that category quite distinctly. And I think they have an unfair advantage in that the strength of their order book is the entire United States military.
Yeah.
So for me, that's a no-brainer.
Yeah, no, I mean, agreed on that. I mean, to your point, I mean, we somehow just totally missed this. Their non-interest margin fluctuates a bit, but I mean, it kind of sits there at around about the 7 or 8%. It gets a little higher at times, a little lower at times. This is a nice-looking business. Chart goes bottom left, top right. I mean, it's not as volatile. I was expecting a more volatile chart.
Why?
Because you lose orders, wars end, wars start.
Yeah, but if your client is consistently having wars, then you've got a consistent bottom left, top right effect.
Yeah.
Consistency from your client is important here.
Yeah, and it's well off the $600 highs, which was actually weirdly October 2024.
Where are we sitting at the moment?
482.
482. Okay. Do we like it enough for it to be blue chip is the real question.
I think it can be.
You think it can be?
Yeah, I mean, I really do. Dividend yield a little smizy at 2.7, but Americans don't much like dividends. They've been buying back shares. They've gone from 320 to 234 million shares in the last decade. So buying back shares as opposed to dividend. Forward PE, 17.5. Not giant, but to your point is that they have a perpetual client. 20 billion of debt, 2 billion of cash. Yeah.
And they're not bothered by the 20 billion of debt because they've got a consistent client. Question then becomes, is in the event that we live in a world where America is no longer waging war on other people, what happens to Lockheed Martin?
So the question, so two things. They start selling to other nations. Can America reduce their defense spending even in a world where they aren't doing as many wars? The answer is yes.
Where the president also, so I want to jump in here because the president also then says he doesn't want wars. Yeah. He doesn't believe the Russia-Ukraine war should have happened.
And then he started a war with the Houthis. I know. He thought the Houthis were like dum-dum, they'll be gone. Yeah. Apparently they spent a lot of money and nothing happened. I hear you, but I don't see it. I mean, I do see Donald Trump and the Republican Party and frankly, surely the Democratic Party as well, wanting to pull back on defense spending. You just got to be so very, very careful. A lot of that is going to revolve around having to close bases and the like, and I do think that will start to happen. It's going to be a slow process, but I don't think that the demand for ammunitions and bombs and other such things is going anywhere but up.
Okay. Fair enough. So there's always going to be a demand there. Interestingly enough, perhaps the other side of it is, while we're thinking about the aircraft carrier, it's the helicarrier from Marvel, but more sophisticated because it doesn't just launch planes; it can hold them, it can fly them, all sorts of things. Right? Do you think? And this is probably the parting thought on Lockheed Martin, that if there is a dry up, if there is a kind of slowdown in business, Lockheed Martin could go back to the Pentagon and say, hey guys, we'll build you an Iron Dome.
Yeah, an Iron Dome or a fancy invisible jet. There's always something.
There's always something, right? Cool. There we go. There's always something out there.
Golden Dome.
Golden Dome. All right. There we go. That's what we're going to call it. Cool. There's always something out there for companies like Lockheed Martin to focus on when wars aren't happening. Very, very strange, but we're going to leave that on that note, and we're going to wrap up the show on that note. Before we go, of course, we have an unfiltered opinion of the week for you, very much along the lines of the one that we gave you last week. This week's unfiltered opinion is that the companies out there, the bakeries out there, those that are able to, so the likes of the Blue Ribbons and the Albanese, bring back the half loaf. It was convenient. You didn't have the wastage of a full loaf in some cases. For families, great, lovely. It's always lovely to have the full loaf. You make sandwiches for lunch and the kids have lunch and all of that. But if you're someone that doesn't have a big family, if you're living alone, if you're you and the missus, just the two of you at home, you don't need the full loaf of bread over a 2-day period. If you happen to be traveling, right? Bring back the half loaf. It's convenient for everyone.
Make more bread and butter pudding.
Or make more bread and butter pudding.
You haven't heard of bread and butter pudding?
That's okay. Cool. We're going to leave it on that note. Remember, folks, investing isn't hard. Just try it.